Hello, everyone, and welcome to today's webinar, Financial Support for Early Childhood Family Day Home Providers. Before we get started, I'd like to go over a few items so you know how to participate in today's event. When you join today's presentation, you selected to join either by phone call or computer audio. If for any reason you would like to change your selection, you can do so by accessing your audio pane in your control panel. There is a document that we'll be referencing throughout today's presentation available for you to download in the handouts section of your attendee control panel. This webinar is being recorded. All participants are placed on mute for quality assurance. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time. We will be collecting these and addressing them during the Q&A sessions throughout and at the end of today's presentation. I would now like to turn it over to Kathy Glazer, VECF President.
Thank you so much, and good evening, everybody. Glad that you could join us for a conversation describing resources for child care programs impacted by COVID-19. We are grateful that so many of you could spend some time with us this evening, and pleased to be able to bring some information to you. We have a good number of folks who are on the call this evening. Many of you are family child care providers, as well as many interested stakeholders, and all of us, of course, are interested in supporting you and recognize how important you are to caring for Virginia's children. And so we're grateful to you this evening. We have a number of folks who are going to be presenting information on the call today, as well as answering your questions in the question box. And I want to go ahead and let you know about the individuals that you'll be hearing from, all of them from the top, and then they'll each be presenting parts of the information for you this evening. First, we'll have Gary Thompson, who's with Thompson Consulting and chairman of the Virginia Society of CPAs, Jeff Capizano of Policy Equity Group, Lauren Small with Early Education Business Consultants, Jenna Conway, who's Virginia's Chief School Readiness Officer, Grace Reef with Early Learning Policy Group, Jody Keenan, the State Director of Virginia's Small Business Development Centers, and Becca Ulrich and Christine Johnson-Staub from the Center for Law and Social Policy. We appreciate every one of these presenters this evening and folks who will be anxious to help answer your questions along the way. We are going to be presenting some information that we all find very complicated and confusing, but we're going to try to tease it apart and offer some very clear and straightforward insights for you. I want to let you know that our goal tonight is to provide some information to you and point you to resources to help you make good decisions that are right for you individually. This is ever evolving, and just want to start off by saying we're in this together. And again, thanks for joining us. I think with that, I will turn it over to Gary Thompson.
Kathy, are you able to hear me okay?
Yes.
Okay, I got kicked off, so I just got back. Good evening, and thank you, Kathy, for the introduction. Sorry for my challenging with technology here. Thank you all for being on this call today. As Kathy said, my name is Gary Thompson, and I am privileged to work with Kathy and a number of folks at the Virginia Early Childhood Foundation and to serve as the chair of the School Readiness Committee. Bottom line is I greatly admire the work that all of the individuals on this call are doing, and thank you for your concern and interest. Every possible word and phrase to describe this time in history has been used, so I'll try not to create one. But as I've talked to business owners and leaders, you can certainly sense a great deal of uncertainty, but also a developing great sense of resolve, which I'm proud of. And I realize that each of you arrived at this call this evening informed by your own individual situations. And while our conversations may not cover your specifics, please know that this group who will be participating this evening, as well as many others, are eager to help you. While I currently serve as the chair of the Virginia Society of CPAs, I had an opportunity today to broadcast a message at which just talked about the call that we're having with you all tonight and the role that our profession can play in serving you. But I would broaden that beyond CPAs who I have a close affiliation with and say, I know there's a lot of individuals who want to help, and hopefully you'll get that sense this evening in whatever your particular situation may be. On this call tonight are a lot of experts. Just before we got on the call, Kathy was talking about the number of PhDs that have been involved in all of this. And I can't help but just to be extraordinarily proud of the efforts of a lot of people. And I know that you'll enjoy the information tonight and hopefully make this disruptive situation that we're all in a little more clear. It's my hope that you can see the opportunities and make some informed decisions. Now, full disclaimer, and you'll probably hear this a lot during our time together, we certainly don't have all the answers. In the last 90 minutes, I've gotten 13 emails on clarifications around the payroll protection plan program alone. So things are moving and very fluid. So please know that we're acting with the best of information that we have now, and certainly will respond throughout the call to questions you may have. But I encourage you to stay engaged with us and others as this situation remains fluid. In one of my best parts of life, for about 10 years, I coached high school girls basketball. Every once in a while, particularly it was a big moment in the game, maybe the game was on the line at the end of the game, I'd get the girls in the huddle and try to get them all excited about what was next, but I would often stop them, particularly the person who's getting ready to shoot those big free throws, and say, okay, let's take a deep breath. And the deep breath was more of just trying to get us just to think differently and to realize that in the heat of the emotions of a basketball game in particular, at that point, we can kind of lose a little bit of our focus. Now, this group tonight's much more sophisticated than the high school girls I would have been coaching at the time. So maybe I do or don't need to say take a deep breath, but as I've talked to a lot of people, that seems to have resonated with folks. So tonight is a little bit about taking a deep breath. With apologies to any politicians that may be on the call, can I say hurry up and slow down out of both sides of my mouth at the same time? Because I think you could do both of those and be right. There are some things that we need to hurry up and do, act with haste, respond quickly to, but then there's other things for which clarification is needed. So we're just going to have to slow down and patiently await clarification, and hopefully part of this phone call tonight will give you that. And all of those, whether you hurry up or to slow down, is going to take some bit of wisdom, some knowledge, some judgment. And again, I believe that tonight's call will give us an opportunity to be receiving all of those. The one thing that I know we all want to emphasize as panelists is that no matter what your size is, your feeling of readiness to deal with this specific situation, please know that this group leading the webinar are here to help, not only in the time we have together, but also when the webinar is complete. Earlier, you heard instructions about how to submit questions. Just want to say that no question's too simple. We don't all start at the same place tonight. We don't all have the same level of understanding. So please know that if there's a question that's really there on your mind that you need an answer to, don't hesitate to let us know that. We are certainly excited to provide whatever input we can, as well as to follow up for those things that we may not have answers. So many thanks to the team that's tirelessly worked to get us here today. I look forward to this time together, and I'll look forward to joining you a little bit later as we wrap this thing up. So thanks again for joining us on the call. I look forward to our time together.
Thanks so much, Gary. Really appreciate that. Next, we're going to turn to Jeff Capizana, who's going to review the handout with you. Jeff?
Great. Thank you, Kathy. And like Kathy and Gary, I just wanted to start by thanking all of you for the work that you're doing. It is vital to getting us through this crisis and to getting our country back on track. So I really appreciate all that you're doing, and I'm excited to potentially be able to help you a little bit on this call. So what I wanted to do is just take a few minutes to make you aware of a document that we put together that may help you in making decisions about whether to be open or close or reopen, and also to help you access some of the federal funding that you probably heard about on the news. This document was a collective effort from a number of different organizations and individuals, and a number of them will be talking with you later on in the webinar. And for those of you who want to access the document, you can find it in the handouts section on your screen. On the bottom left, it's child_care_guide.pdf, and that's the document that I'm going to be talking about. So we know that there's a lot of information that's coming at you, and I'm sure you've heard about the opportunities for support from the federal government. And so what we've tried to do is to take as much of that information that is relevant to you and organize it all in one place. I think the speakers throughout the webinar are going to be talking more specifically about the information that's in the document. So I'm just going to walk you through it really quickly, and you can access it later, but they'll be talking sort of in more detail about it throughout the webinar. So if you could go to the next slide, please. So what we've done is we've organized the document into 3 sections. The first section is what we're calling a knowledge guide. And what we're trying to do with that section is just to really provide you with information, the most up-to-date information that we have, organized around the topics that we think would be most important to you. The financial stability of your home or your program, ways in which you can support your workers and staff, ways in which you can protect your own health and then the health of your children and families, and ways that you can support the well-being of families within the community and the community as a whole. And I think, what's really important about your work is that, you're doing an amazing service, not only for the families that you're providing services or care for, but those families are going off and they are healing the sick, they're feeding people. And so your work is so important. And so the next part of the document is what we're calling a risk benefit assessment. I know there's a lot, it's a difficult decision whether or not to stay open or reopen or close. And so what we've tried to do is to provide some considerations for you, some questions you might want to ask yourself about sort of the risks and the benefits based on a number of different sort of criteria. So, what are the risks and benefits to your children and families? What are the risks and benefits to your program and staff? What are the risks and benefits to your community for staying open? And this decision obviously is going to have to be your own, but we were trying to provide you some guiding questions to help you come to an informed decision. And then the last section of the document is a financials flow chart, and it's really works to try to get you to the benefits and the supports that you may need. It starts with an inventory of the revenue that you might have and your expenses, given the conditions that we're in. And then it gives you a tool to calculate short-term cash flow and whether or not the cash flow will meet your needs or what you will need to meet your needs, and then provides a path towards additional funding as necessary. And so let me just give you really quickly just some examples of what the document looks like. If you can go to the next slide, please. So this is kind of an example from the knowledge guide piece of the document. And so you can see from this, it's like one of the things in the maintaining financial stability section is that we've talked about sort of the current subsidy payments that you might receive and some of the key points about that. But there's also more money that has been allocated to the Child Care and Development Fund through the recent stimulus. And so we provide information on that. And then also there'll be more information coming down from the state about how that money is going to be spent. And so what we've done also is to make sure that you are continuously getting the information, the most up-to-date information, is we provided links to where you'll be able to find more information as the situation sort of evolves and continues to progress. So next slide, please. So this is just a quick example of what the risk-benefit assessment looks like. You can see that, when you think about sort of the considerations related to staying open, reopening, or closing, there are benefits and risks to children and families and to your staff and to the community. And so we provided some guiding questions to help you assess the risks and the benefits related to that. Next slide. And so here's just an example of sort of how one might get to specific resources that are specific to your particular situation. So if you look at the first column, we provide some scenarios, ways in which you might need help, whether or not you're self-employed, And then on the right columns, we have different programs that have been created as a result of the stimulus funding. And so we try to draw a connection between your situation, the help that you might need, and the appropriate program or funding source that might be able to help you. Obviously, we're going to talk a lot more about this and throughout the webinar. I just wanted to give you a quick overview of what the guide looks like. And you can access it through the webinar. And if you go to the next slide, it's also going to be on the website earlyeducationbusiness.com, and you'll be able to find it and access it there too. Kathy, back to you.
Thanks, Jeff, very much. I appreciate that. Next, we're going to hear from Lauren Small, and Lauren will ask you to get started now. Thank you.
Okay, thank you, Kathy. Good evening, everybody. My name is Lauren Small. I am a business coach and consultant that has spent many years working in the field with family day homes and child care centers. And my role is as a coach, as a trainer, as a consultant. And I think tonight what I can help you all with is, like everyone has said, there's so much information coming that it's hard even for us that look at this all the time to adjust quickly to the changes. And so I want to encourage all of you to first of all understand that family day homes are just this incredible and essential piece of our early care and education system. And we need you more than ever to get through this pandemic. And our goal is not only do we just survive, but we thrive when we're all done with this. And that come June 10th, when the restrictions are hopefully lifted in Virginia, that we're ready to get to work to care for Virginia's children, because parents are going to need you. They're going to have to get back to work. So I look at my role tonight is just to help you put on your business hat and think strategically. I know it's stressful. I can only imagine. It's been stressful for me. I know it's stressful for many of you. And there's really no one size fits all when we think about this strategically. Some of you are closed, some of you are open, and there's no wrong answer. Everyone's situation is different. Your families are different, and how you're responding is different. So we're definitely going to give you information. We're not trying to overwhelm you. There will be lots of resources shared and places you can go on the internet to get more information. But more importantly, there's people that you can call. We have an army of trainers in this industry, technical assistance providers that I want to encourage you to reach out to when you have questions. Virginia Quality Consultants, your CCNR, your infant toddler specialists, everyone right now is doing and focused on supporting our providers. So I just want to encourage that. Please, next slide. So one of the things for family day homes, in my experience over the years, is talking to parents and capturing tuition. We know that family day homes have just these wonderful relationships with your families. We're very nurturing people, and we love children. We love what we do. And so this pandemic has created a lot of different scenarios for how we capture tuition. And so one of the first things I think we have to realize is that we may have to kind of shift our thinking from how we've typically operated. A lot of my trainings over the year, we've been really talking about the importance of having policies consistent across the board for all families, and really trying to capture tuition for this valuable service that you're offering. But I think in this situation, and I do want to give credit to Tom Copeland. I know many of you know Tom's work. He is our national leader when it comes to the business of family childcare. So I've been listening to everything that he's been putting out. And it's really the recommendation has shifted that we have to look at each family a little differently right now. And so I want to encourage you that that's an okay practice right now, because some families have lost their job and don't yet have income coming in. Other families have taken their children out of your program, are working from home, still receiving income. And some families are still bringing their children in for care. So it's all over the place, the different situations. When we talk about capturing revenue, charging tuition, I think this has been difficult. And I've done some of these webinars, the last couple of weeks, Family Day Homes, because we have families that are struggling. We have families that are just withdrawing. And so the first thing, though, if families are withdrawing, is your policies still do stand. And so hopefully they're giving you the notice that's in your contract and that you're able to capture that revenue. Another industry practice is the idea that parents pay for a spot in your program, and that if they no longer want that spot and they formally withdraw, then that spot is no longer available for them. And so one of the things that has been working really wonderfully is to have really good communication with your families right now. And the relationships are important because everyone is a little bit stressed and uneasy. But the families need to know that when this thing is over, they're going to need you and they want to have their spot. And so whatever you decide to do with your policy in terms of what you're going to charge, and I'll be honest, if some providers, if families aren't attending, are charging a discounted rate. Some have decided not to charge anything. It's really up to you what you want to do. But the recommended practice is to charge a holding fee that secures their spot. And so that also enables you to have some income so that, again, when this is over, we can all get back to business. What we're finding too is that our current contracts aren't really set up for this new situation of the coronavirus, the pandemic. Next slide, please. And so one consideration would be to perhaps update your contracts with the language to include this so that you have an enforceable contract should this kind of situation come up again. And that ideally we're getting parents to sign these new contracts that you will charge, whether you refund money or you charge a discounted rate, however you want to do it, but that you have the contracts in place to support your new way of operating. And again, you can have different contracts right now for different parents in different situations. Next slide, please. The other consideration that I just wanted to mention, many of you are aware of that our business model, the Family Day Home business model, is, in the eyes of the IRS, the only model that has this special calculation of time-space calculation. And so one of the things, I kind of skipped ahead here. Actually, let me just go to the top part of this slide. Is just to mention, like, if your income is down, you've lost income, a lot of people think, well, maybe this is a deductible business expense, a loss. Or if I give a discount, any of these different things, forgiving payment, it is not a deductible business expense. So I just want to be clear about that. Now, how can you minimize the loss of income? And one of the strategies is to increase your time-space deduction. And as I was saying, that's a special deduction that only Family Day Homes can take, and that it helps reduce your taxable income. So if you are shut down or you work fewer hours, one way to reduce your taxable income is to try to get that time space percentage just a little bit smaller. And this will reduce the amount of house expenses and shared expenses that you can deduct. So one of the ways you can do that is to start tracking, if you're not, and really think about the impact of all this extra time that you've been spending on dealing with this pandemic. So reconstructing the hours that you've spent talking to parents beyond normal business hours, talking to other providers, to all the time that you've spent on the internet researching, dealing with the virus. All that time that you've spent on your business, not in the presence of children, goes into this calculation and again helps to reduce your taxable income. So even if you've closed, you can still count hours going forward that you are in your home doing a business activity. So also think about all the extra time we've spent cleaning, talking to parents, talking to other providers, preparing to open again. There is that the more that you can get that time space calculation, get it higher, the more money you save in taxes. Next slide, please. So let's talk about some strategies to reduce expenses. I know everyone is looking at everywhere you're spending money. And as a business owner, it's even more important we operate as lean, green machines. Looking at everywhere you spend money and continuing just to try to pare it down as much as possible. Some things are going to just naturally reduce if enrollment is down. You can deduct everything that you're buying to combat the virus. Many of you are really good at capturing your receipts and have great accounting practices. This would be the time to really, make sure that you're being vigilant in capturing every expense you're spending on your business. Here's some ideas, like deducting the food that you've had to throw away because the children are no longer there, or you have less kids. Lower income means also that you're paying lower taxes. It's a time to kind of get creative too. Perhaps you'll be eligible now when you go to file your taxes for the earned income credit or other federal or state credits. And I think that we're going to continue to see new things come out. So it's really important to stay in touch with these technical assistance providers, with the websites. I'm going to share a website that we're working really hard to keep up to date and to try to stay in touch with other providers and share. When we say we're in it together, we really are in it together. So that, again, we're all coming out on the other side of this, still in business and ready to go. One thing that has worked really well for a lot of providers is if you have expenses, creditors, credit card bills, mortgage, really anything, most creditors are working with their clients to reduce interest rates, defer payments. It is worth asking, and it has really taken a lot of stress off a lot of providers to at least not have to worry about that right now while income is low. In the document that Jeff was talking about, we talked about a cash flow projection. And to some folks, you may go, whoa, that sounds confusing. But it really is just a tool. And there's lots of them out there. We've developed one for early care and education providers that just gets you looking at every week what's coming in and what's going out and how much cash do I have, and really trying to, again, be strategic and identify the gaps. Is there going to be a place in time where this business model isn't going to work, where I'm not going to have enough money? And when you can identify what those gaps are, then that's where you can go, all right, I've got to take some action here and fill the gaps. Timing is everything for businesses right now, and cash flow is just a critical piece of thinking strategically. Next slide, please. And I mentioned Tom Copeland, and I wanted to add a slide here because he's doing a lot of webinars right now for the National Association for Family Child Care Providers, and they're archived. He is freely open to answering questions. He's got a social media page, he's got a website, he's put his email there, and his webinars go in really deep, like these conversations around contracts, charging tuition, unemployment. So that's another great resource just to build your knowledge base, again, with all these very complex topics that are coming our way. And that's it for me, Kathy, right now.
Thank you, Laura. I know we'll be circling back to you soon. Thanks so much for the great information. And we're seeing a lot of appreciation and some good comments of folks who are really hearing what you're saying, Lauren, and appreciating the information. So thank you for that. Next, we're going to turn to Jenna Conway and hear a little bit about child care subsidy, child care stimulus. Jenna, are you on?
I am. Can you hear me, Kathy?
Yep, sounds great. Thanks.
Excellent. Thank you. Again, this is Jenna Conway, Chief School Readiness Officer. And echoing what other folks have said, wanted to thank everybody who's joined us this evening on behalf of the Governor, his administration, the Department of Education, Department of Social Services, just a huge amount of recognition to our partners, both within the Commonwealth and across the country, who helped pull this document and resources and webinars together, as well as to the folks on the phone, as noted before, whether you are open or closed, just the work that you do every day with children across the Commonwealth is so invaluable, and wanted to reflect that. What I'd like to do is do a brief snapshot on where we are, what we know about childcare in the Commonwealth as of today, clarify a few important points for you, and then talk about what we're working on right now as it relates to the CARES Act and some resources that specifically are going to states to support childcare in the field during this crisis. So what we know in the Commonwealth today is that right now 60% of our childcare centers are closed, including more than half of our childcare centers that take the child care subsidy program. So it's a significant number of programs that have reported being at least temporarily closed. We know that many of you on the phone are family day homes, far fewer of you have closed. So we only have reported to us roughly 18% of our family day homes have reported being closed. And so just a huge thank you in terms of you all staying open and continuing to serve our children and families who need that childcare and these services so desperately. We also know that just under half of our religious exempt programs are also closed at this time. So pretty significant number of temporary closures across the Commonwealth, really since COVID-19 descended upon our state. Together, collectively, this represents a loss in the system of about 200,000 slots. So again, a really significantly different landscape than where we were at the beginning of last month. A bright spot, as Jeff and others noted, is your work in staying open. Our family day homes, which are not often our programs that are fully recognized as being essential to our families and to our kids, are able to stay open. Generally speaking, you all are smaller numbers, right, which ensures some compliance with all of the new rules around social distancing. And we know that you are taking kind of calculated risks and doing what you need to do to be able to serve kids and families. I want to clarify a few important points about the governor and the kind of executive orders and how it relates to family day homes and child care centers more broadly, child care more broadly in the Commonwealth. So first and foremost, although we have put in place a stay-at-home order and an extended school closure in terms of all of our public and private schools, child care programs, whether in centers or family day homes, can remain open. So again, I want to emphasize that. I know there's been some confusion in the field. Obviously, it's a confusing time, as Gary talked about. It's combination of moving very quickly and moving very slowly, and so many new things and new information happening at once. And so we realize in some communities there's been some misinformation, but our child care programs, whether in a family day home setting or in a center setting, can remain open even with the shelter in place, even with the school closure. The key ask is that folks prioritize serving children of essential personnel. Again, very broadly defined. This document talks about that, but obviously our healthcare professionals, our first responders, and then all of those other essential personnel who keep our society running, whether that's the folks working at Walmart, at Target, the gas station, who keep those packages coming, those lights and utilities running, our garbage picked up. All of those essential personnel, our bus drivers, their children need to be cared for, and we know you all, particularly those who have remained open, are on the front line of that work. The governor, in his announcements and sort of in subsequent guidance documents that have come from the Department of Education and Department of Social Services, have emphasized that our child care, our family day home educators are essential personnel. It's really important to recognize. I know sometimes you all are unsung heroes in terms of doing this work, this incredibly difficult work day in, day out, kind of across our communities. We just want to recognize that you are essential, that you can remain open in terms of kind of making sure that our society can continue to function. And third, and we are working on a letter for the field to this regard, is trying to figure out where possible, and we know that obviously this is a public health crisis first and foremost, but how do we make sure that it's clear that childcare programs, our family day homes, can remain open, and that you should be a priority for some essential materials. So we, Department of Education, Department of Social Services, right now are working on a letter, and as soon as it's available, we'll post it on our website. We'll let VCF know. We'll post it on the Department of Social Services website, the COVID website, just to kind of clarifying so that you can print and have a copy of a letter that says, yes, families can still come to your service. Yes, you are essential and you serve essential personnel. And where possible, whether you're going to your Kroger or your Walmart or whomever to kind of get your key supplies and other materials, that helping them understand that you are essential to, you're kind of an essential business and you're serving essential personnel. So we are working on that letter as we speak on sort of joint letterhead, and hopefully we'll have that out and available by the end of the week, just trying to, again, help you in some of those local conversations when we know cleaning supplies are scarce, when we know that there are sort of shortages in various materials, food, milk, et cetera, across the state. The other key point that I wanted to share is that the administration, so Governor Northam's administration, as well as the Department of Social Services and Department of Education, are looking at the new funding that became available through the CARES Act that specifically relates to the child care and development block grant. So again, there's a lot of things that came out of DC. This guide is chock full of them. But one of the things that was explicitly included, thanks to the work of advocates across the country, were dollars that are meant to benefit the child care sector during this crisis. So what this act did is put an additional $66 million for the Commonwealth of Virginia towards their child care development block grant. It said it should be used to support child care during this time, that it can be used to provide a lot of different flexibilities, so helping kind of address some of the challenges for those of you who are serving kids on subsidy that might be open or might be closed, as well as you who may not be on subsidy but are staying open to serve essential personnel. This was very exciting for the Commonwealth, both that this was explicitly named, so that said this has to be a priority. That's what the federal law said, that these are dollars that have to go to support the child care sector. Not just our family day, not just our child care centers rather, but our family day homes as well. And so the Department of Education, the Department of Social Services, the Secretary of Education, the Secretary of Health and Human Services are working very closely with Governor Northam's administration as we speak to figure out in very short order, so as soon as possible, how we can get that $66 million out to the field. So, as Gary noted, we're kind of running as fast as we can. Yet this is one of those cases we're going to have to ask you to be patient. We're still working out the details. There's as you all are kind of experiencing, these things are complicated, but it is our goal within at least, ideally this week, if not by the end of next week, to let you know how Virginia will take the $66 million and get it out to the field to support those programs that are serving our essential personnel, right? Because helping our society function, helping our health and hospital system function, helping our first responders function, as well as supporting our most vulnerable families, those families on the child care subsidy program, and making sure that we have enough emergency child care to last the duration of this crisis. And I think that's the last kind of important point to note. The governor, a doctor, right, a medical professional, at least based on the best evidence he's seen, expects that Virginia will peak in mid to late May. And so a lot has happened in the last month, and I also want to prepare you all, and we are here to support you throughout this, but we really expect this will last throughout the next month of April, May, and into June. And so really looking at how we can best use that $66 million to support the field over that period. So again, just to kind of reiterate, or sort of to say again from the top, we know that our family day homes, right, that sort of 4 out of 5 of you have stayed open. You are essential to your community. You are serving essential personnel, and you yourselves are essential personnel. You can remain open. You are not required to close due to the stay-at-home order or anything else that's come out of the administration. And we'll be providing a letter later this week to that effect in case you're having any difficulty locally. We think of you and your educators as essential. We want you to be the priority as you're looking to get supplies and materials. We hope to have guidance and more information to you within the next 2 weeks about how the $66 million in the CARES Act, or the stimulus, will directly benefit the child care sector in the Commonwealth. And it is our plan, as soon as those dollars are available to us, to begin getting them out to the field, because we know times are really tough right now, and we hear you and we understand that. With that, Kathy, I think that's my summation, and I'll turn it back to you.
Thank you, Jenna. There are a couple of questions that you touched on, but I hope that you can answer a little more fully and maybe just direct people to where they could find information if they have additional questions. One attendee has asked, what if all the parents I'm serving are all non-essential and working from home? Am I allowed to stay open?
It was slow. I don't think it was bad.
Certainly, that's a great point. There's a little bit of background there. I think, so again, I would encourage folks to look at the broad definition of essential personnel, again, in terms of, assuring that society can function, and that there is a broad definition there. And again, a lot of the times, as we've said before, there is no police officer, judge, and jury of essential personnel. So sometimes, we're encouraging folks to work with your parents to understand how their work might be essential. We do not condition or say that the parent has to be working out of the home in order to be eligible for this. So we do know that there are folks who are helping our banks run, our hospitals run, other kind of parts of society run, and might be doing it from their home. And quite honestly, have to be at their computer or at their phone all day long. And so they need to be able to have their children come to, to a family day home or to a child care center. I should also note that the governor has really emphasized that the priority should be essential personnel, but there's not an explicit prohibition. So we are not trying to put you between you and your parents in terms of that right now. We just want to make sure as a state, as the medical crisis ramps up, as we need to have our EMTs, our police officers, our folks working around the clock, that we have enough slots for them in their systems. But there's no prohibition about kind of non-essential personnel. The key piece is always keeping that group size small, so no more than 10 individuals in any space, including all kids and adults, and then really trying to kind of the higher degree of health and sanitation. But again, I think most people think of essential personnel and they think, oh, it has to be a doctor, a nurse, or a police officer or a firefighter. And a lot of our food supply chain, our transportation supply chain, our utilities, all of those might be parents who are working remotely, and that is also essential to society functioning. So again, we take a very broad definition of essential personnel for the purpose of childcare.
Thanks, Jenna. And then there are 3 more questions, and I think I'll probably put all of them in a category of your comment that still working through the details, but this is the type of question that folks are bringing forward about the stimulus that you mentioned. Is the money for emergencies? Will those dollars just be for programs that have remained open? Will the grant be for all types of programs, licensed, voluntary, or unlicensed? I don't know if there are parts of that you can answer, or is that a to be continued?
No, I can answer part of it. I think we've tried to, and thanks to the incredible work of my colleagues at the Department of Social Services, Department of Education, and then folks on the phone from BCF, as well as Voices for Children, Elevate Early Education, we've tried to stay close to what the needs are. We've had conversations with communities across the state, and a few needs have made themselves clear. I think one of which is supporting emergency childcare. I think another of which is supporting those programs that take subsidy, whether open or closed, and kind of thinking about how do we support them. So as discussed earlier, that they're here to kind of open back up if they're currently temporarily closed once we're through this crisis. And then I think the other one is to think about who are those folks who have remained open and are doing this work right now. And I think we'll be looking at kind of all of those areas or buckets. I don't think it'll be just one. With the $66 million, we'll fund one type of these areas. I think we will likely try to put funding in those different buckets to address the different needs that we've heard from the field, from providers, from advocates, from stakeholders across the Commonwealth over the course of the last month. So our goal and what we've proposed to the administration is funding in different areas. And as soon as a decision is made, we will communicate that. And again, this is one of those few instances in government where the feds are trying to turn this around in a matter of days or weeks. And again, the state will also try to do that because we know you are under incredible pressure. I will say, I always say this because it's better to under promise and over deliver. I don't think the $66 million, and the other folks on the phone can probably vouch for me on this, will solve the entirety of the hurt, right? And I just want to say that not because I want to shirk any responsibility to use that $66 million in the best possible way to support you in this time of need, but the hurt experienced by the sector when you think about kind of, again, the closure of nearly 200,000 slots is of a magnitude that's far greater. And so we're trying to kind of quickly triage, get these dollars out for the most pressing needs, wait on our heels and advocate in DC for additional support because we know that the hurt and the pain goes beyond that. I think we are excited to participate in this webinar tonight because we know there are going to be other places, there are going to be cases where people are going to seek unemployment or payroll coverage or other things. And we think that's so important because those federal dollars can help address some of the pain. The $66 million that will come through is important, but can't address the entirety of the loss experienced by the folks on the phone and experienced by the sector over the course of the last month. And I just want to be direct and honest with people about that, Kathy.
Thank you, Jenna. Really appreciate that. Appreciate the straightforward answers. And if you are able to stay on, there may be some more questions that come forward for you. But at this point, we are going to turn to Grace Reeve and hear from her now.
Hi. So I guess we can go to the next slide. Hi, everyone. I'm going to do a very brief overview on food assistance. The program is called the Child and Adult Care Food Program, although I think most people call it just the food program. So some family day homes get reimbursed by the federal government for food that's nutritious meals and snacks that are served for low-income children. Not everyone participates, kind of depends on the children that you serve. But if you do fall into this category, I wanted to just briefly tell you some highlights. Congress recognized, in the midst of this emergency, schools are closing, some people, some families, those children may only receive meals and snacks at school or within their childcare program. So Congress has put a tremendous amount of flexibility now with the food program. And I just want to briefly tell you a couple things. One, this applies whether you are open or closed. So I know some of you may have made a difficult decision for a variety of reasons to close. And if you did, and if you were participating in the food program, it might be worth a discussion about how you could take those resources and be creative to let families maybe pick up, grab and go is kind of the phrase that's going around today, but make sure that the kids continue to have access to nutritious meals and snacks. These could be delivered, they could be, parents can pick them up, but the idea is we're in this uncertain period, and some of the families really depended on either their school or their childcare program to ensure that their kids could eat. That's kind of the bottom line. There is a meal pattern related to this federal food program, which makes sense because we want to make sure that in feeding children that these meals are nutritious. And what I'm going to tell you is the flexibility that's been provided now is really do your best. There are plenty of communities where you go to the grocery store, particularly as a family day home or family childcare provider, and those shelves are just empty. We have the new reality for a while, and it's unclear how it's going to last, but that is the reality. And so what is going on at a higher level is that a tremendous amount of flexibility has been provided for this program to make sure that families with children can continue to eat, and that the program operates in a way that's really common sense. If you can't meet exactly the guidelines that everybody used to follow, their little menu calendar, don't sweat it, just do the best that you can. We're all every day trying to do the best that we can. The food program by itself could probably be its own webinar. I just wanted to give you a high level overview, but what I do want to point out is that there's a really great webinar from FRAC. It's recorded. It's maybe 45 minutes or an hour. FRAC is the Food Research and Action Center. They are in DC. They are full of the nation's experts on everything related to all children's nutrition programs. And so I encourage you to check out their website, listen to the video. Watch the video. I think it's full of information. The U.S. Department of Agriculture also has set up a page, and I've provided a link so that you can go there. This was just high level on this slide because there's a lot to it, frankly. And my next slide, which you can go to now, is about unemployment. And so I really want to talk a lot about that. I don't want to undermine the importance of food. It's super important, but I do want to direct you to the FRAC webinar, which is recorded because I think it's a great resource, and also that USDA COVID-19 page. And that is updated daily for the most current information. So I know there have been a couple of questions about unemployment, so I do want to go over that. Jenna mentioned the CARES Act. That is the official name of the legislation that Congress passed. Not to be confusing, but Congress did pass 3 major bills in about 10 days, and there are a lot of super complicated provisions in those, and many of them we're going to go through today. But one of the big ones was some major changes to unemployment. So typically under state unemployment programs, people who were self-employed, which includes childcare providers, family childcare providers, were not eligible for those state programs. So what Congress did is said, wow, this whole national emergency is so broad. What we want to do is help states out and make sure that there's a safety net for people who otherwise would not qualify for the state program. So there's a brand new program. It's called the Pandemic Unemployment Assistance Program. You don't need to actually be concerned with what it's called. You just need to understand the concept. And the concept is there's a state unemployment program, and certain people qualify for that. And Congress acted in a way to set up a new system. So if you don't qualify for the state rules, you are very likely to qualify for the new federal program. The self-employed are definitely eligible. Receipt of benefits really depends on your situation. I know some people are closed, and if they're closed, they'll be able to apply for full unemployment. Some people, maybe it's just a loss of income. Maybe you cared for 6 kids and now you have 3. So that's a reduction in income. So the design of unemployment now is the state system, and the new federal one is all going to be implemented by the Virginia Employment Commission. And it should be seamless. So it doesn't really matter if you know the name of the program. It just matters that, hey, I'm unemployed, or hey, I've had a big loss in income. I'm not serving the same number of children that I used to serve. So that is kind of the big framework of it. In addition, because quite frankly, unemployment benefits vary by state, and those amounts are all over the map, Congress said, we know this is an incredibly difficult time. And so they set up a temporary supplement to unemployment. So you might get one base amount that's based on your earnings. And then Congress said, anybody who qualifies for the state program or the new federal pandemic program, we're going to give you $600 extra per week as a supplement. Now it's temporary. It only runs through July 31st, but really it's recognition that this is an unprecedented time and has caused great difficulty, not just for small business owners like Family Day Homes, but also the families. And so they have tried to make sure that the unemployment system, which is typically set up for people who get unemployment to receive kind of a low amount with an incentive to look for work, to go back to work. But now the incentive is really to be made whole as much as possible. And particularly, here in Virginia with a stay-at-home order, to be home and have enough to help your families. Next slide. So I can see the top question is, how do we apply for it? That is the question of the day. So where do you apply? And I want to tell you, you can do so in English or Spanish. There might be a bunch of other languages that we may need to figure out how to facilitate that. But anyway, the Virginia Employment Commission does offer, you can click on English, you can click on Spanish, you can apply. And it's really set up to be a one-stop shop. No one expects anybody to be an expert or PhD in state assistance or in federal assistance. What you need to understand is the concept. Am I unemployed? Did I close my business? Have I had a loss in income? And if the answer to any of that is yes, as a Family Day Home, you can apply. I want to really tell you, this is all new and everybody is scrambling. And to give you a sense of it, we're all under a stay-at-home order, but that also includes federal employees. It also includes state employees. So people are working from home the best that they can. But this new system is going to require a few technical changes as well to the state website and to some of those rules that are ordinarily triggered when you go to fill out a web form under the state program. So, I want to tell you, the system's not up yet, but also let you know that people are working night and day to try and get it up as soon as possible, to try and understand the federal guidance, to make sure that it's set up correctly, to try and get at the technical aspects so people can apply online. There is a phone number. If you use the link on this page and you go to the Virginia Employment Commission, there's a phone number. But, lots of people in Virginia will be trying to call in. Probably the easiest way to access is through the website. And the state program is operating now, but the new federal one, that's not quite up yet. I think it will be soon, but that could be a couple weeks. It's unclear. Some of these technical things need to be worked out so that people can click on the link and the system doesn't crash, that kind of thing. What I can tell you really that I think would put you in a great position is document it. So if you've closed, when did you close? If you are, now serving 3 kids and you used to serve 6, be able to document that loss of income, because unemployment is based on earnings. So you want to be able to show when the U.S. Department of Labor releases the rules of what you'll have to show, but you want to be able to show that you did close, that you have had a loss of income, that kind of thing. So you can use this period when the website's not live yet to at least gather the information that we're guessing is probably what they're going to look for when they say, oh, so you closed when? Oh, so what are your earnings? One thing I want to point out, I think it's worth thinking about. I think that Lauren, who started this webinar, gave some super helpful advice and information. And one thing I'd like to supplement with is some of you may have filed taxes already based on your 2019 income, but some of you may not have. I know plenty of people wait for, March or April to file. So you think about, go back through your records and take a look. And if you think you made more in 2019 compared to 2018, and you haven't yet filed your taxes, I encourage you to get your stuff together and file online. Because when the website for unemployment for the new federal program is live and they ask you, proof of your income, that might be one way to show it. So think about, did you make more in 2019 versus 18? Have you filed your taxes yet? If not, that might take a little bit of time, but get your documents together. We're glad to provide you some links to, tax experts, if that's something that you feel like, yeah, I haven't filed yet, and it's because all those federal forms are scary to me or intimidating to me. I mean, I don't know anybody on earth who says, yay, federal tax forms, I can't wait to fill this out. So we're glad to send out some links about where to go if you need some help to fill out those forms. But it may be in your interest, if you earn more in 2019 to compare to 2018, to file online. And as soon as we know the exact documentation that is needed, we will send that information out, definitely to everybody who registered, on the webinar, and let you know. So I mentioned that benefits are based on earnings, and I mentioned that there's an extra $600 per week that will be added to a base benefit. Base benefit meaning the new federal unemployment pandemic assistance that's available. When you get that, it's called the base amount, and the extra 6 weeks will be added on top. I want to take a moment and just say, you might get a partial payment based on income loss. And I mentioned that a little bit before, like if the number of children you're caring for is down compared to where it used to be, and you're able to document that, then you can file. And you can show how your income's dropped. And you might be able to get just a small amount because you're not fully unemployed, but even a partial payment is better than nothing. And the way the rules are written for the $600 supplement per week, even if you get $1 in that pandemic unemployment assistance, you will get that extra $600 a week supplement. So that's quite a bit and something to think about. Again, we don't know the exact documentation yet that's needed, but as soon as we do, we'll get that around. One thing I do want to mention is that when you fill out the unemployment form, they'll probably ask you, how do you want your unemployment compensation? And so you'll probably be able to click on, oh, I'd like it through a debit card or direct deposit. And also there's likely to be, you will be able to get a check. I would just tell you if there's any way to get it through a debit card or direct deposit, that's faster. Cutting checks now is likely to be slower. And with people working remotely, it's a whole new process to make that efficient. I do want to flag that unemployment is income. So maybe it's less than the income that you typically earn, but nevertheless, it's still income, so it's taxable. You may be able to indicate that you want them to withhold taxes before they send it to you. So to the extent that the state sets it up that way, that would be great. Some of those things, we don't know yet, but we will know soon. But it is something to think about. And the last point that I have is when you are eligible for unemployment, you're eligible because you can lawfully work in this country. So you do need to, undocumented individuals who may take care of kids in their home won't be eligible because you do have to be able to lawfully work in the country. I will tell you as I briefly scan some of these questions, this doesn't matter if you're a registered home provider or under a local ordinance or licensed. If you're in the business of caring for other people's children and you're getting paid to do so, you're self-employed. And so assuming you're filing taxes on the income that you earn, you would have documentation to show that you're either closed, open, or had a partial loss of income and be able to apply for unemployment.
Thank you.
So I think that's my last slide.
Appreciate all the great information, Grace. There's one question that I will put forward to see if you can answer, and then we'll go ahead and give a heads up to Jody that we'll be calling on her next. This question, Grace, is if we are not currently a subsidy provider and may in the future provide services to essential personnel,
Yep.
are we required to become a subsidy provider in order for essential families to receive the funding?
Probably the coverage of essential families is a Jenna question. I don't know whether they're out of their child care and development block grant money, if they're going to pay for the care of essential personnel. I haven't heard that, so I don't know the answer. But I can tell you, when you apply for unemployment, it doesn't matter whether you care for subsidy children or you don't. What does matter is, I'm kind of making this up as an example, but I gave you an example of, hey, I usually care for 6 kids and now I'm down to 3. And if the state, and if 3 of those kids who didn't show up are on subsidy and the state continues to pay for them, but that you're not in your home, you still have income from that. So you wouldn't be able to kind of double dip. Like if the state is paying you, you can't apply for unemployment and claim a loss of income if you're still getting money from the state, to care for kids on subsidy. If on the other hand, you usually take care of 6 kids and 3 are on subsidy, but they don't come anymore because they're home with mom, and the other 3 were private pay and only one of them is showing up, then your loss of income would be for 2 kids. That would be the 2 private pay who are no longer coming. So you're getting income from 1 kid who's private pay. You have 2 private pay kids who don't show up, so that's a loss in income. And if you also had 3 children who were on subsidy and the state is still paying you, then you're kind of made whole on the subsidy front. So that's something you'll have to watch is, the income that comes in, and if you're still paid subsidy even though you're closed, then that's still income and you can't claim unemployment on top of it.
Okay. Thank you, Grace. We will, I know that there are a number of questions in the question box that we'll ask you to address individually as you can. And I think just in the interest of time, we're going to move on to Jody, but thank you. Lots of comments of how much people have appreciated the information that you brought, Grace. Thank you so much. And
Sure.
now, Jody, we'll turn it to you.
Okay, thank you. Good evening. I think we need to invoke Gary's suggestion that he used to give his female basketball players, which is take a couple of deep breaths, because I've been paying attention and I'm a little overwhelmed. So I would imagine that the audience is overwhelmed too. So let's just take a deep breath, and before we go on to the next section, okay, in and out. Okay, if you need to stand up and shake your arms around a little bit, have at it. We can't see you, so, and you'll have all the slides shared with you after the event. Thank you so much for being here tonight. Again, I'm Jody Keenan. I manage the Small Business Development Center Network in Virginia, the SBDC. We are a partner with the Small Business Administration. We have 27 offices across the state. So every city, county, town, community has access to one of our local offices. Our business advisors provide one-on-one business support at no charge. We are operating remotely now, so all the work we're doing is by phone or by email or by Zoom, webinar, web conferencing. If you want to go to the next slide, you'll see my website address, virginiasbdc.org. Please feel free to go on there, and under locations, you can look to find a local office near you. We have instructions on there how to access those resources now, since, like I said, we're not meeting with people in person, but we're definitely meeting with people remotely and helping business owners just like yourselves get familiar with the offerings and understand what resources are available for you. I'm going to be talking with you today about, tonight, about three things. Two are the SBA loan programs, the Economic Injury Disaster Loan and Advance, and also the Payroll Protection Program. These are the big programs that you've been hearing a lot about in the news. And then we'll talk briefly about small business tax provisions. The first web link here for SBA, sba.gov, when you get the slide deck, when you go to that site, there'll be all the information about these programs and some additional programs, but these are the main programs for you right now, I think, including the application forms for you to use as you're making your requests. Okay, if you'll please go to the next slide. What we've pulled together here is just a summary comparison chart of the EIDL loan, which is the Economic Injury Disaster Loan Program, the EIDL Advance, which is the grant, and we'll talk about that in a bit, and then the PPP, the Paycheck Protection Program. What we've done is tried to give you kind of a snapshot, and I realize there's a lot of text on here, but just a snapshot of how much you can borrow or get a grant for, how much, who is eligible, what you can use the funds for, what the terms are if it's a loan, and what is forgivable. So I'm going to go through these at a pretty high level, and but hopefully can answer some questions as you go down, as we go down. First and foremost, let me tell you that all of these programs are available for sole proprietors, independent contractors, or businesses with under 500 employees. They're also available for nonprofit organizations and faith-based organizations as well. So there's a really broad spectrum of companies and business owners who are eligible, or organizations who are eligible for this. The intent of all of these loan programs is pretty simple. It's to help keep people employed and businesses operating as best we can during this immediate period of crisis here. So you'll see as we go through, the intent, as I said, the money is available for short-term use, and it's to cover payroll and some other explicitly defined operating expenses. It's not intended to help a business expand. It's not intended to replace lost revenue, although in a sense it does help you cover payroll that you may typically have covered with revenue, but it's not intended to fully recoup lost revenue. There are other programs that can help you expand as we go forward on this, but right now we're talking about keeping employees employed, keeping businesses operating and open as best as possible. Okay, the first two, the EIDL and the EIDL Advance, these loans you would apply directly to the Small Business Administration. You go onto their website at sba.gov/disaster. You find this loan application, you complete it, and you submit it online directly to SBA. That's an unusual circumstance. In most instances, you go to a bank for financing, and they work with the SBA to back the money. So with the EIDL disaster loan, you go right to SBA for the funding, and the check and the deposit will come to you through the Treasury, the Department of Treasury. The EIDL loan is available for up to $2 million. It's really based on 6 months operating expenses. And they're looking at what your payroll was, what your utilities and overhead were, and what interest you had been paying for the past, they look at it 12 months, they look at your 12 months and they take the 6-month average, okay, to determine the loan amount for EIDL. There is also a grant component of EIDL, and this is where you get an advance of up to $10,000. You have to first apply for EIDL, so you go onto the SBA website, you complete the application where they're going to ask you for your name, your business name, your address, your annual gross receipts, your annual operating expenses. They'll ask for tax identification numbers for the business and so on. You complete that application, and the last question they ask you is, do you want to request an advance of up to $10,000? And the answer is yes, I want to request an advance. You check that box. They ask you on the application to give them your bank information, bank accounting number, or excuse me, bank routing number and account number, and then you submit. The intent is that this $10,000 would be dispersed to you before the full loan. The advance is available whether you are approved for the EIDL loan or declined for the EIDL loan. So either way, you're still eligible to get the advance. You don't repay the advance. It's not taxable. So it's a bit of a, it's an easy application. I will tell you that there is some confusion still, and I'm confused as well, around whether the amount is $10,000 for everyone who asks, or if there is some consideration for a size, number of employees in a company or an organization. And unfortunately, I don't have an answer to that question. We're recommending that everyone go ahead and apply for it, because 10,000 or 5,000 or 4,000 or 3,000 of no cost money can help in this circumstance. If you also get the full EIDL loan, so in it, you get not just the 10,000 advance, but you apply for more than that. There are that interest rate for for-profit businesses is 3.75%. For not-for-profit organizations, it's 2.75%. There are reductions in collateral requirements. There are reductions or eliminations of personal guarantees depending on the loan amount that you're looking for. The term of this loan, of the EIDL loan, is up to 30 years. So it is a kind of an affordable way, again, to provide funds for not just payroll, rent, and utilities, but also other accounts payable or expenses at your business, or bills that you are incurring or have incurred, are incurring or will incur. The deadline to apply for the EIDL loan program is the end of this year, so December 31st, 2020. It is on a first come, first served basis, so you know, you want to consider that as you're looking at your options here. The next loan, which is the P3 or the PPP or the Paycheck Protection Program, is really kind of the big kahuna in this whole menagerie of offerings, because there is a loan forgiveness component to this loan as well. So provided that you keep employees employed and maintain salary levels or wage levels within 75% of pre-COVID rates, you are eligible to have this loan forgiven. Oh, and you need to do this over an 8-week period of time, a 2-month period of time. So you're eligible to have this loan forgiven. This loan, the application is made through a traditional banker. A bank who is already approved as an SBA lender, that you can find those lenders again on the SBA website. You enter in your zip code and the system shows you a list of lenders in your geography, in your region, that are offering the 7A loan, or the PPP loan rather. We'll talk about that process in just a minute too. The amount that you can borrow is up to actually 2.5 times the average monthly payroll costs. Payroll maxes out at $100,000 per employee. So if anyone is making more than that, it only covers up to that $100,000. Again, it's available for small businesses. It's available for nonprofits and faith-based organizations, 501c3s. It's intended to be used to cover, as I mentioned, payroll costs, which includes salary and fringe and any benefits that you might offer your employees. It's also intended to cover interest on mortgage payments. It's rent and utilities. As I mentioned, collateral is waived, so there's no collateral at all for this loan, no matter how large of a loan you get. The maximum is $10 million for this loan based on your salary calculations, the 2.5 times monthly salary cost. So there's no collateral, there's no personal guarantee. You don't have to demonstrate for any of these programs that you could have gotten credit from another source. As I mentioned, it is up to 100% forgivable, provided that you meet these criteria, which is that over the 8-week period, 8 weeks from the day you get your loan, 8 weeks forward, that you maintain staffing levels and salary or wage levels of those employees. There is a window of time where if you've let people go, that you can bring them back and it would count towards this full staffing measure. So, you know, again, the SBDC or other advisors can help you interpret the eligibility for you on this one. For any portion of the loan that is not forgiven, so let's just say you don't bring everybody back and you don't maintain the salary or the wages at that 75% level, then the portion that you're not qualified would need to be repaid. The interest rate is 1%. The term is 2 years. So even the unforgiven portion of the loan is pretty reasonable at a 1% interest rate. And again, for either of these loan programs, there's no prepayment penalty. So you can prepay the loan without getting penalized. You do need to be careful about you can apply for both of these programs. You can get the advance, you can get the EIDL loan, and you can get the PPP. You just can't get money more than once for the same purpose. So there's no double dipping, and I think we talked about that earlier, about some other benefits here. You can't get paid multiple times for the same expenses. And again, we can certainly help walk you through all of that. So that is this visual is my attempt to make this slew of programs a little bit easier to digest and interpret. But there's certainly a lot more detail on the SBA website about each of those programs. Let's go to the next slide if we could. I'm sure there's questions, but we'll get to those in a moment. There are provisions in the CARES Act to cover employers and nonprofits whose operations have either ended partially or fully, or if you've had a decline in gross receipts, you're eligible to apply or to receive a tax credit for compensation, up to the compensation of the first $10,000 for your employees. So certainly many of you will be in that category. So you're eligible for the tax credit on payroll taxes, and then you're also eligible to defer payment of the payroll taxes into 2021 and 2022. You have to pay them, you just don't have to pay them in 2020. You can pay 50% at the end of December 2021, the other half December 2022. So the intent here, again, the intent here is to help you keep people on your payroll, but also to help you as an employer have some available cash to keep the rest of your operation going. So that's why these credits are here, and you can defer payment for those taxes down the road. Okay. Again, I know that there's a lot of text and things to digest here, but we can certainly help you through that if you want to come in and talk with us or give us a call. And then the last slide, if we'll go to that, just some cautions or some managing expectation tips. As Grace mentioned, the Department of Labor hasn't fully rolled out this extra unemployment benefit application process yet. SBA and the banks are in a similar state of development, kind of building this plane or train as we go along. The volume of lending that is being administered through this is about 10 times more than the SBA does in a year. So to have rolled these out in a very quick way and with high expectations, we just ask you to go up, but not to dally and delay applying, but to just be understanding and patient about how the process works and to manage your expectations. I mentioned for the economic injury disaster loan advance, although the language has said up to $10,000, there's some new verbiage around you might not be eligible for the whole 10,000. So again, we won't know that. I mean, it's early in this process, and I just don't have any facts to share with you what average amounts are. They also are talking about that when you submit the EIDL, the request for that advance of up to 10,000, that you'll have that in your account within 3 days. Well, no one has gotten a deposit in 3 days yet. So I'm not sure when that clock starts ticking, but there's a longer time before you get the advance. A new addition to both the EIDL loan and the PPP Faith-based organizations and churches are eligible to apply for these funds as long as they're a 501c3. So that opens up a lot of opportunity, maybe for some childcare providers who are affiliated or owned or managed by faith-based organizations and churches. I mentioned that for the PPP that the SBA approved lenders are the ones who will be making these loans. The SBA set up criteria ideally to make these loans easy to get from a bank to a borrower. And that, while that is true, lenders have prioritized how they are reviewing applications. So they are typically requiring that applicants for PPP loans be existing bank clients. And by existing bank clients, that means that you have a business account with them, that you have a business credit card with them, that you have perhaps a business borrowing relationship with them. And then they look at, do you have a personal account and personal credit cards and personal loans with them? So they're really looking at the business relationship. SBA and the Department of Treasury are trying to engage many more banks to participate in this program so they can get so they can be that much more accessible to businesses in every nook and cranny in the country. I would encourage you, if you are looking for a lender for a PPP loan, first and foremost, go to the lender that you have a relationship with, a business relationship or any relationship, okay? Don't let that discourage you. Go to a bank that is a 7A lender that you have a business relationship with. If the bank that you work with is not a 7A lender, so they're not able to process these, then look for another bank who is experienced with 7A lending or SBA lending. Don't go to a bank who just yesterday signed up to be a 7A lender. There are complications. It's just a process, and you want to have someone who knows how to work with the SBA and has some experience with that. I will say, if your current bank does not have 7A lending authority and you're looking for a bank, I would encourage you to look at community or regional banks before you look at large national banks. Regional banks, community banks tend to be much more user-friendly and accessible for small businesses, and easier to work with. So I would encourage you to go that route. And then the loan forgiveness, which I've talked about, is it goes for 8 weeks, and the 8-week count starts the day of your loan origination. One final, managing expectations, please be aware of scams, be super sensitive to this. You don't have to pay anybody to help you apply for these things. You can come to an SBDC and get free advice and free assistance, but you don't have to pay anybody to do that. Thank you.
Jody, thank you so much. We realize we're right at the 8 o'clock hour, and so going to just take a few more minutes to wrap up with information. For those of you who need to hang up, we will be sending the recording, the slides, the handout, all of the information to everybody who registered, whether you were able to join or not tonight, as well as on our social media. We'll definitely be in touch with more information along the way. Really appreciate everybody's time this evening. So if we can sort of put it in fast mode, Lauren, I know you have a little bit more information you'd like to share, and it's important that you be able to pass that along, and then we'll let Gary wrap us up for the evening.
Okay, thank you, Kathy. Next slide, please. As we continue the discussion around financing, I think it's important Virginia providers understand that there is a special loan program for childcare providers. It is managed by the Virginia Small Business Financing Authority, which is the lender, and it is funded through Department of Social Services. This is an underutilized loan program, and so even if you perhaps don't use it now, I think it's good to keep in your back pocket for the future. They have about $4 million in this fund to lend. And just some unique things about it, though, is first of all, it is available to family day homes, whether you're licensed or voluntarily registered. You are eligible if you accept subsidy or participate in the U.S. food program, USDA food program. For family day homes, the loans can be up to $10,000. Right now, the interest rate is 0%. They've reduced it during the coronavirus, and they have extended when the payments would start, which for 6 months. There's typically a $25 application fee, that's waived. But the thing that's tricky about this is use of the loan proceeds, which the loan can only be used for tangible items. And they have some requirements in how they do that. Either you want to see receipts or they actually pay the vendor on your behalf. So when we say tangible items, think about the things that you buy for the health, safety, quality of your program. So tangible items like playground equipment, mulch, fencing, had a list actually, cribs, cots, changing tables, manipulatives, art supplies, not disposable tangible, you can't use it for like diapers, but those things that you would typically have to make kind of a large purchase to buy. What I'm trying to do, and you can move to the next slide, is to get you to think creatively about your financial situation as a business owner. And I think we as an industry are used to being flexible, we're nimble, we know how to stretch a dollar, and this is a time to get creative. One of the things that I've seen a lot of providers do is provide letters to their families, to their community, asking for what they need. Hand sanitizer, paper materials, it's disinfectant, to ask for help. In my community in Hampton Roads, we've got this partnership going where we're partnering with the schools because they're not open to get all that hand sanitizer out, clean it up, and get it out to providers. And from what I understand, that's happening across the state as we work together. And we're seeing this pop up in local communities, business grants. All kinds of companies are stepping forward to support small business. You all are definitely small business and critical to what we're trying to do. Stay in touch with your economic development departments in your community. Jody and I were talking earlier, and she's seeing these little grant programs pop up in communities to support small business. Still go traditional routes, direct loans, home equity loans. The IRS has waived the penalty for withdrawing. I would hate to have to do this, but it's an option you just need to be aware of, that you could withdraw money from your retirement account at no penalty. Getting creative. I did see, and I don't know, Kathy maybe said maybe we don't put this on on the diagram, but I've seen business GoFundMe. I saw Facebook partnering to help support businesses with GoFundMe. Get creative right now. One of the, in the handout, we talked about the budgeting, and I've seen this question pop up in the chat, like, how do I decide? There's all these loan programs, what's the best way to go? And honestly, I think the best way to go is to run scenarios and get hard numbers attached to each of these programs and see what's going to be the best and most beneficial for your financial situation, given all the different parameters. So, taking some time to analyze it, put it on a spreadsheet or however it works for you to analyze the information and make an informed decision about the best way to move forward with all these great options. And then lastly, I just wanted to wrap up, and next slide, please, is just to think also about next steps. We know that this virus will end, that sooner or later it's going to be time to get back to business. And to think creatively and to think about what you can do to, if you're not open, reopen. If you're open, how to fill your program. So we now, and I've been on a lot of meetings, Zoom meetings, I'm more Zoom meetings this last week than in my entire life, I think. But we know in all these conversations that there are still essential workers out there looking for care. And just if you think about our ability as family day home providers to be nimble and flexible, healthcare workers don't work often traditional hours. And so this might be a time where you start to be a little bit more flexible in how you operate. Perhaps you extend your hours. You start to offer part-time hours. You do what you have to do to make it work for families so that they will want to take advantage of your services. If you haven't taken school age, there's a lot of them out there and they're not in school and they may have parents that need to work. So again, being flexible and adjusting to what the market demand is, what the market need is. I think that's what is called for right now. We can't right now do things the way we've always done it. If you do change your hours, remember to just kind of circle back to your liability insurance company and make sure that those changes are still in your policy and covered. And then as we think about what's next, this would be the time, especially if you have a little extra time on your hand, you have less kids, you're closed, this would be a great time to work and get to those things that we never have time to do and to work on your business. So get ready for summer. Think about what you're going to do and be ready to hit the ground running. And then family day homes traditionally aren't as quick with technology. So perhaps this is the time that you really dig in there and figure out how to get your business online. Think about how families who are looking for what you do find you. And one of the most important things to do when you think about marketing is making sure you're found online, matching up. So Google has Google for Business. It's a free product that gives you a listing on the internet. And Google is the #1 search engine, so you definitely want your business on Google. If you haven't used social media, I want to encourage you just to explore it. I know it's not for everyone, but it's where our young families are at, and it is a great way to market and to show what you're doing with these kids so that families see how awesome you are. If you are going to pay for advertising, Facebook is the #1 way it works for providers to connect them with families. And then think about other referral sources and just stay in touch with them. Make sure you're listed on the Child Care Aware, that tool where they're asking, are you open? Connect with your subsidy person and make sure they know you're open and they can refer families. This is a time to be proactive about making those connections. And then last slide. I want to tell you about a website through my company. We're working really hard to try to keep this up. And there's so much information flowing, so we're committing to tracking information around the business model for Virginia providers. And so there's the link. And again, we're working to keep it up to date. We have a network and providers depend on one another. And I would say this is the time to really lean into your network of other providers and share what's working and to support one another and know that you don't have to know all the answers. It's okay. But ask the questions, and by working together, we're going to work to navigate this. And I wish you all the very best success. Thank you.
Lauren, thank you so much. You're such a great champion for providers and appreciate all the great information. I think we are just about to the finish line. And Gary, we're going to let you have the last word.
Well, thank you all. Thank you to the presenters for being part of this valuable time. Thank you to all of the providers you play such an important role, not only in the economy, but in what we're trying to do in early childhood. And we can't thank you enough for the time that you've given us this evening. Lauren, in her opening section, said there's an army of consultants out there. So we'll include the Navy and say there's also a boatload of information that we provided to you in this. And I hope that while this information is challenging to get through, that you'll take the opportunity to review what we've done, listen to the presentation again if you have time. And please do be in contact with us for additional resources. And as clarifications come, there's a lot of folks who are on this call tonight that can provide those resources and clarifications. Thank you to Kathy and the VECF, to Jenna Conway representing the administration, for all those, again, who participated. My best to you all is stay calm and keep moving down the road, and we'll get through this together. Thanks so much for your time.
Thanks, Gary. Good night, all.